Welcome to the Gold Newsletter Podcast, your bank of knowledge of investment, economics, and geopolitics. Go to goldnewsletter.com for our publications and archives.
This is the Gold Newsletter Podcast. Fergus Hodgson, your host, joined by my co-host, Brian London. And we're excited to be back with you. We always appreciate your subscription. So if you want to subscribe on YouTube, SoundCloud, wherever you're listening, that is greatly appreciated. We have Nick Giambruno today, and he is a long-time financial analyst, man of the world. He works closely with Doug Casey, another guest on this show. So his bio is contrarian speculator, geopolitical analyst, investment professional, and he works with Casey Research, particularly focused on the value investing advisory, crisis investing. Nick, welcome to the Gold Newsletter Podcast.
Great to be here.
Yes, and I'm eager to have a go at this topic. Is Bitcoin overtaking gold as the modern inflation hedge? And as we record this, I see Bitcoin is up 273% in the last year and is pushing 35,000. So what does this all mean?
Well, I think we need to always define the basics and start from there to unpack this. And talking about an inflation hedge, we got to understand, what is inflation? Inflation, the proper definition of it, is just an expansion of the money supply. That's the traditional, and that's the correct definition. Over the decades, it's been perverted to mean an increase in prices or retail or whatever. That's not the definition. Most people confuse the two. The difference is confusing cause and effect. So inflation is a totally political phenomenon. It's in a fiat money system, because that is what is driving the increase in the money supply. It's not something that the butcher or the baker decided to increase his prices. That's a consequence of what the central banks and the governments are doing. So I think it's very important to lay that foundation. So when you're looking at inflation, we're talking about a political phenomenon, specifically the destruction of purchasing power of money. And that's another thing we have to just look at. What is the basics of money? Most people don't even know what money is. I mean, they use it every day and they don't even know what it is. They think it's something the government gives them. There was an interesting analogy I heard recently. It's the average person. It's like asking, if a fish could talk and the fish says, well, what is water? I mean, the fish is surrounded by water. He doesn't even know what water is. And that's the same kind of thing you have with most people. They don't know what money is. And what is money? It's very simple. It's not hard. It's something that stores and exchanges value. That's it. So when you look at what is going on with gold and Bitcoin, you have to have these basics in mind, because what they're doing in gold and Bitcoin are two free market alternatives to money, this function of storing and exchanging value. And yeah, they are going to benefit when their primary competition in the market, which is fiat currencies, are being debased and destroyed through inflation. So that is what's going on here. And which one is going to ultimately win or be successful? I don't know. I like gold and Bitcoin. I like them both. I own both. I recommend both. And I was very much into gold before I discovered Bitcoin. And I like Bitcoin for many of the same reasons I like gold. So that is kind of a long-winded answer, but I think it's important to set that foundation before we move on in the conversation.
Nick, Brian here. You say you like Bitcoin for a lot of the same reasons that you like gold. Now, gold, of course, is long known as the ultimate money and a store of value, and it seems like that's something Bitcoin, if you can give it human characteristics for a second, kind of that's aspirational for Bitcoin. It wants to be on the level of gold as far as a store of value. Right now, with the kind of volatility you're seeing in gold, 5% basically average daily volatility over some periods, it doesn't seem like it can function, at least currently, as either a store of value or really as a currency, either side of that kind of spectrum between fiat and gold. So or what we're seeing right now, that kind of volatility, is that just the growing pains of the concept and of the asset of Bitcoin? Is that something we're going to put behind us at some point and it's going to have a steady value, or is it going to evolve to some point where it's going to have a steadily growing value as adoption and uses expand?
Well, I think the volatility is natural and expected in Bitcoin because, again, with Bitcoin is something nobody alive has ever seen. And that's the creation of a completely new asset that's undergoing monetization. I mean, think of it. Bitcoin went from having a market value of 0 to over $600 billion today. It does $40 to $50 billion in transaction volume a day. And that's happened in like 11, 12 years. So there's nothing anybody alive has seen that has gone under a process of monetization like that, becoming money. So I think, yeah, it's going to continue to be volatile until it potentially eats up more of the store of value and money demand of other monetary goods. But one thing I want to go back and mention is that one of the things, in my view, that the most important reason why gold has been money over the millennia is because it is the one commodity that is hardest to inflate. It's the hardest asset. That's the proper definition of hard asset. It's a term that gets thrown out there a lot. Hard doesn't mean tangible. Hard means hard to produce, hard to inflate. That's why gold was not because this is often confused, not because gold is scarce. It is scarce. Platinum and palladium are scarce too, but they're crummy monies. Why are platinum and palladium crummy monies? Because they're not hard to produce. They're very easy to produce relative to existing supplies. So the production of annual production of platinum and palladium, even though they're scarcer than gold, is about equal to the above ground stockpiles of platinum and palladium. Therefore, the price of platinum and palladium is heavily dependent on industrial conditions. It's not like that with gold at all. Gold is unique in the sense that annual production is insignificant, the most insignificant of all commodities relative to its stockpile. So that's, in my view, what gives gold its monetary properties. And the most important one is nobody can inflate it. Nobody can inflate gold. It's resistance to inflation. That's the most important monetary property of gold. And that's also consequently why I like Bitcoin, because it shares that monetary property. It's hard to inflate. And let me just quickly add too, I would put Bitcoin in a completely different category than all of the other cryptocurrencies. They're not the same. Those are not hard to produce. Bitcoin is really the only one that nobody controls. Every other cryptocurrency from Ethereum, which is the number 2 cryptocurrency on down, they're controlled by development teams. They can wake up one day like a central bank and change the money supply if they want. They're not hard assets. I liken them, the other cryptocurrencies. They're like digital Chuck E. Cheese arcade tokens or digital Six Flag tokens or digital frequent flyer miles. That's what they are. Bitcoin is completely different because there is no one group of people or anybody that controls it. So it's much more like gold in that sense. But yes, so Bitcoin is an emerging store of value. It's an emerging money. It's going to be extremely volatile. I expect it to be more volatile. And time will tell that if it will continue to gobble up demand for that store of value, that monetary demand from other assets, fiat money, or gold, or even real estate is monetized. People use real estate as a store of value, which is kind of odd. It's only because of the fiat money system that people have nowhere. I mean, they can use gold, of course, but a lot of people don't know about gold. So they use real estate as a store of value. So Bitcoin and gold are competing. They are competitors. They're competing for money, but in particular, the store of value function of money against other monetary assets.
Mate, there's so much to pick apart there, Nick. The challenge I have is that the purported use when Bitcoin first came to the scene, as you said, over a decade ago, was actually as a medium of exchange, and that it's proved just too expensive for that process. Is that going to undermine its store of value use?
No, this is a common misconception. The thing is that Bitcoin doesn't compete with Visa. It doesn't compete with MasterCard. It competes with SWIFT and Fedwire. And prior to that, how did you settle international trade? You took gold and you dumped it off at the other country's central bank. So you got to think of Bitcoin as the base layer. It is the base layer. It represents final settlement, international final settlement, irreversible. It's like a bearer instrument. It's like a bearer instrument in the same sense a gold bar is like a bearer instrument. So what is going to solve that? Yes, I mean, Bitcoin transaction costs about $5. And it's variable. The transaction fees represent a free market of people, of buyers, and of scarce space on the Bitcoin blockchain, and people bidding for that scarce space. So at $5, it's impractical to buy coffee on Bitcoin. But it was never meant to. Well, it's not. That's not the important part. Is putting everybody's coffee transaction on the blockchain. What is important is putting that international final settlement layer, akin to SWIFT, akin to Fedwire, akin to international settlement. That's what you want to keep secure, and then you build on top of that other payments networks. For example, there is something called the Lightning Network that's being built on top of Bitcoin for these small transactions. So the idea is to keep the base layer secure, not able to be changed by anybody, immutable. And that's only possible with because of its decentralization. If we want to put everybody's coffee transactions on the blockchain, you're going to need big data centers, and it's going to be centralized in a couple of big players, much like Visa is, much like PayPal is. So actually, this is not a good thing. You do not want to put the small transactions on the base layer. Why? Because it necessitates centralization. And without decentralization, there is no immutability. And without that, there's no Bitcoin. So that's how I would answer that.
Sure.
If there's, it seems to me right now, Nick, that a lot of Bitcoin, actually, a lot of the value is rooted in speculation. To me, it's like a non-revenue or non-profit producing tech stock or tech company that everybody thinks is going to be the next big thing. So they're plowing into it. And the reason why people are buying it is because the trend line is up and they think it's going to be worth $100,000, which is essentially the reason why I would think the majority of people who buy Bitcoin today are buying it, because they think there's a good chance of $100,000 in a year or two or three down the road. Is that a viable model for an investment, or does that make Bitcoin a speculation right now?
It's interesting. As I mentioned, Bitcoin is a completely new animal. I don't think it's appropriate to compare it to stocks. It's clearly not a stock. I think it's a new form of money. You just have to, it's a new paradigm, a completely new paradigm. So the way to look at it is, I look at it as hard money with a call option attached to it. Yes, there is going to be speculation, but that doesn't negate the economic properties that it has. And namely, it's a hard money, and you can quantify hardness. Hardness is quantified through something called the stock to flow ratio. And prior to gold had the highest stock to flow ratio of any commodity. And that's how you quantify hardness. Basically, it's how much new stuff is being added to the existing stockpile. So gold, it's like 1.7% each year. The stock to flow is just the inverse of the supply growth function. So Bitcoin has that economic reality. It's a hard asset. It's uninflatable. So yes, it's going to draw in speculation. But even if the speculation disappeared tomorrow, I still would be attracted to Bitcoin for its fundamental monetary properties. Yeah,
and I agree with everything you're saying here, and I do believe that Bitcoin as a backbone for international transactions, and really a backbone for any transactions, real estate, et cetera, is an ultimate use for it. I'm a little dubious or cynical about the use in everyday transactions, but that too may evolve over time. Our friend Peter Schiff makes a lot of arguments against Bitcoin. And, you can say Peter's right or wrong, but you can never say he's in doubt. And, and I think, though, that he makes a lot of solid arguments. And one of his arguments Bitcoin is functionality of one Bitcoin versus the functionality of 1 millionth Bitcoin is no different, that it can still serve as the backbone for a transaction. So that arguments against the limited ultimate supply of Bitcoin don't really make sense, because like the dollar, it's infinitely divisible and maintains the same functionality, and that ultimately it could be debased based on its that divisibility. What do you think about that argument?
Well, that's simply not true. It's not infinitely divisible. It's divisible up to the 1/100 millionth of a unit of a Satoshi. It can't be divided beyond that, and it can't be inflated beyond that. So there's 21 million Bitcoin in the protocol, and there's 100 million Satoshis per Bitcoin. Nobody can alter that. That's not the same as looking at fiat currency and saying, oh, we can just divide the dollar. This is it's a fixed supply. So you can't inflate it by going to a smaller unit, because there is no smaller unit. It's set. So no, I don't view that as a concern.
I stated Peter's argument. That was precisely his argument, that ultimate number is in the quadrillions, and it's large enough that it's functionally unlimited.
Yeah, no, that's not necessarily true. Think of it like this. The market cap for the monetary base of all fiat currencies in the world is something on the order of $40 trillion. So if Bitcoin gobbles up all of that monetary demand of that $40 trillion that's maybe not a precise number, but it's very close. If the Bitcoin gobbles up all of that monetary demand of that $40 trillion of fiat money, how much is a Bitcoin going to be worth? Well, it's going to be in the neighborhood of $2 million. How much is a Satoshi going to be worth? It's going to be worth about 2 cents, 2 pennies. So Bitcoin, that you can view that as the capacity to gobble up the world's, and that's not even counting gobbling up the monetary demand of things like real estate. People use bonds as a store of value. So Bitcoin could potentially demonetize all of these assets. And that is a capacity to do that. And in terms of the small payments, that's nothing to worry about either, because they're building things on top of Bitcoin. As I mentioned, the Lightning Network is one of them. Let me just address one thing too that is a common misunderstanding, and I've heard it often, is that Bitcoin has no intrinsic value. And I've looked into this, and I've come to the conclusion that there is no such thing as intrinsic value. Intrinsic value is the same thing as saying inherent value. And one of the first, and I'm a follower of Austrian free market economics. And the first thing you learn in Austrian economics is that all value is subjective. There's no such thing as inherent value or intrinsic value. I think people often mean industrial value, but let's just talk about this for a second. Who does believe in inherent value are actually Marxists. Marxists believe in inherent value. They believe in the inherent value of labor. They think labor, anything that has labor, has intrinsic or inherent value. And the great economist Murray Rothbard debunks this very easily. He says, well, if labor has intrinsic value, make a pie made out of dirt and see if you can buy, it should have value. You put intrinsic labor into it, it should have value. So people should buy it. Of course, people aren't going to buy it, but it just illustrates that it's kind of a ridiculous notion. Also, people, they used to find oil in their backyard. Didn't know what it was. They thought it was garbage. This was before people realized the economic potential of oil. Now oil is black gold. People would be happy to find oil in their backyard. The oil didn't change. It's just how people subjectively valued it. So I think, and the reason why people value gold as money, it's not because it's used in dentistry or electronics or any other industries. They view it subjectively as money. And in my opinion, they view it subjectively as money because it's the hardest thing to inflate. And that's how I view that objection, because that's a common objection. I think that needs to be clarified.
Yeah, that parallel is useful actually, because as you say, gold is not necessarily used industrially. I mean, it is, but that's not the key driver of its worth. The driver of its worth is as a store of value.
Oh, absolutely not. Like I said, Bitcoin or gold is interesting as money, not because of its industrial use. It's interesting as money because it's the hardest commodity to inflate. It's the hardest asset. On the flip side, that's why silver is not as good of a money, because it is mostly an industrial metal, and it is easier to inflate. It's an interesting tidbit of U.S. history. If you go back It's like William Jennings Bryan. Before fiat currency was even on the minds of people, there were these politicians in the US who advocated for silver because silver was easier for them to inflate than it was for gold. So anyways, it's an interesting monetary history. I'm a fan of monetary history, and the history of money is simple. The hardest money always wins, and that has usually been gold, but now gold has Bitcoin as a competitor. So I don't know who's going to win, but I like both.
The Gold Newsletter is proudly sponsored by Inventa Capital Corporation, a venture capital advisory firm dedicated to the acquisition and development of assets in the natural resource sector. Today, Inventa is one of the premier mining groups with a first-rate portfolio of companies and a world-class team.
Hi, this is Brian London, and I'm here with our CEO interview of the week. As you regular listeners know, Inventa Capital Corp is our new Gold Newsletter podcast sponsor, and one of their constituent companies is Outback Goldfields, a very exciting play. I'm very happy to say I'm a shareholder in the company, and we're welcoming Chris Donaldson here, the energetic and enthusiastic CEO of Outback Goldfields, who is going to tell us all about it. The bottom line, or to set the stage with Outback, is that the Victoria Gold Rush was one of the biggest gold rushes of the last century in Australia, and one of the biggest gold rushes of the last century the world over. Took about a century off, and now it's back again. Thanks to the great discovery by Kirkland Lake Gold, which of course Gold Newsletter readers were the first into, by the way, I have to mention, and in their Fosterville mine discovery. But Outback is the exciting play in this gold rush now because of a tremendous land position. It was kind of because of a special relationship able to go back in time a bit insecure in the middle of this land rush, of this gold rush. So Chris, welcome to the podcast. And can you elaborate on that setup I just gave you?
Yeah, great. Thanks, Brian, for having me. It's exciting times for us. So we're a new company. We acquired 4 properties in December of this, or just last year, that we've been working on for quite a while. And that was, mainly due to the relationship that our chairman, Craig Perry, had with some financiers in Australia. And so we acquired these properties from a publicly listed company called Petratherm, who acquired them 3 to 5 years ago. And they wanted Craig and his team, which is now what I'm now a part of, to run these projects and have it in a Canadian vehicle or North American vehicle. So we've currently listed on the CSE, likely move to the TSX, and we're getting an OTC listing here pretty soon. We're also on the Frankfurt Exchange. So we've acquired the assets. We had a raise in December and tried to raise $6 million, had tremendous response and raised over $11 million. And now it's go time. So it's we announced our phase 1 drill program, which is going to be kicking off. Well, it's kicking off now, but drills will be turning in a couple of weeks. And yeah, we want to see if we can find what anything close to what Kirkland Lake found with their big discovery called the Swan Zone. So to your point, Victoria, what is old is new again. I mean, the history there is. In the 1850s to 1920, over almost 80 million ounces of gold was produced. Made Australia the richest country in the world for a while, and there was it was a huge staking rush at that time, big nuggety gold. And the story in the region is that it was this alluvial gold that big nuggets that they would mine down to cover, and that cover would be either they hit the water table or a basalt cover, and they would stop. They didn't have the kind of techniques and modern techniques to be able to get a sense for what was underneath the cover. And it wasn't until 2015, I guess, so about 5 years ago, that Kirkland Lake went a little bit deeper and found the source for that alluvial gold that was next to their or on their tenements. So, and of course, it was a bonanza discovery. I mean, we're talking 50 grams per ton, a couple of million ounces, and so on. And it made them the highest grade, highest margin mine in the world, and that's what we're going for.
Yeah, and it's not just that they didn't have the technology to find out what was under the cover, but they didn't have the knowledge and the technology and the techniques to try and find the source of all that gold. And while the Swan Zone has made headlines recently, historically, some of the production in that area is just mind-boggling. And we're talking about producing properties that are directly adjacent to your property. So the question in any land rush play, is closeology versus geology. And so in that respect, what are we looking at right now without that?
Yeah, I mean, we've got a bit of both, and so we have 4 projects in and around the Fosterville mine. One project that we have is actually touching Kirkland Lake on one side. Their tenements were 5-6 miles from the actual Fosterville mine. On the other side, Newmont came in a couple of years ago and bought a bunch of properties. On the third side, what's really interesting right now is the Victorian government has put up for auction 4 land packages, and we'll find out in March who gets them. The rumors are that it's going to be like a $30 to $50 million earn-in on it. So yes, it's a closeology play. We have the centerpiece of what's going on right now in Victoria, and it's not just majors that are coming in there. Kirkland Lake is putting $85 million into exploration on the project next to us this year. If you add up all of the juniors, including ourselves, they're probably $150 million going into the ground this year. And so, what is nice is, if anybody gets a discovery, all boats should float, because then we're able to repeat, what they found with Kirkland Lake. And that's been the challenge so far. So that project is a closeology play, but it has very similar markings to what Kirkland Lake has. Our other projects are similar. They're located on faults with historical high grade gold production, and it just hasn't been explored in some cases 100 years.
Yeah, you stole my thunder. I was about to make that point. You don't have to make a discovery in the near term to see the value of the company rise quite significantly. Anybody makes a discovery around you, and as you say, your 4 properties touch a lot of the really ideal properties and geology in the area. If anybody makes a discovery, everybody goes up in price, and it heats the play heats up even more so. And one of your properties, I know you had mentioned, is directly adjacent to a really big historical producer.
Yeah, I mean, one property, there's 16 million ounces within, 2 miles of our tenement. And so the question is, okay, well, why didn't they mine on that property? And this is the story of the region, is that they did a little bit of mining on the property, and then they hit shallow cover, and they stopped. Right. So, but this alluvial nuggety gold has some kind of source. And so we've got to go below cover to find it. And so, what the local geologists of from Victoria are thinking is, okay, there's historically 80 million ounces. There's likely another 80 million yet to be discovered.
Well, it's an exciting story. Again, I'm glad to be a shareholder, and Chris, glad to see you running the show there. Looking forward to the news coming up. You're well financed, and I know that the news flow is about to begin. I didn't mention the trading symbol is OZ on the Canadian Stock Exchange, so that's an easy one to remember. Chris, looking forward to your periodic updates here in the podcast. Thank you so much for joining us today.
Hey, great, Brian. Thank you.
Yeah, the great points in monetary history really shows that silver was pushed as a competitor or as money, not so much because of its ability easier to inflate, but because the big silver barons out west were buying up politicians and buying their votes. But it's interesting too. Yeah, silver, the majority of silver production, about 70%, I believe, is a byproduct of other mines, and it is used in industrial usages. But I think that's just a canard that's been repeated. Don't really understand it. Silver's value does come from its monetary value. If it was purely industrial, it'd be under $5 an ounce. I made a point in some Golden Opportunities letters and Gold Newsletter last week that, and this was in response to a tweet that somebody had put out, that at some point this year, you won't be able to buy bullion, and there won't be any available. And people were saying that's crazy. And I said, this is not crazy. It's actually probably going to happen at some point this year, because industrial demand, primarily for gold and even for silver, doesn't really drive the value, and it doesn't respond to, therefore, like copper, to supply demand fundamentals that can take years to shift. It responds to demand and monetary demand, and that can change in a flash. And I said, at some point this year, you won't be able to buy gold and silver bullion, and you need to buy it now while you can. Well, I didn't know it was going to take 3 days for it to happen.
Yeah.
And that's exactly what happened over the weekend, is that we had the silver squeeze, and all the available inventory in the United States, or even in the West, was absorbed over the course of a weekend, with very little ultimate effect on the price, I might add, with a spike and then a fallback as we speak. So I guess the question is here, what are your thoughts about gold and silver then going forward, and Bitcoin, which also has a limited supply and a lot of the same fundamentals that you're seeing? Do you see that as a replacement ultimately for gold, or is it something where they can both go side by side? And what do you see about for the near future for both assets?
Well, the free market is going to have to decide this. What is going to be the ultimate store of value? And I don't know. I think it's good to have spread your bets. Like I said, I like them both. And I'm interested in gold and silver for purely monetary reasons. I'm not personally, I don't want a money whose value is held hostage to ever-changing industrial conditions. I don't want that as money. I just want money. I want something that can store value. I think it's really going to come down to gold and Bitcoin in that regard as the ultimates. Who is going to win? Well, the free market will tell us who is going to win. And yeah, I mean, this is the first time gold maybe has a serious competitor. It's a new paradigm. So it's going to be very interesting to see how this plays out.
And Nick, you made some Bitcoin maximalist remarks. If I can, would you characterize yourself in that fashion as a maximalist, and that you don't see the altcoins as genuine competitors?
Yes and no. I don't like that term because it was originally introduced by Vitalik Buterin, who was the founder of Ethereum, in a sort of disparaging way. So no, I don't describe myself as a Bitcoin maximalist. I can describe myself as a freedom maximalist, a money maximalist. So as something that has look, if you can show me something that has better monetary attributes than gold or Bitcoin, I'm a fan of it. But these altcoins, they don't have they have the same monetary attributes as frequent flyer miles or Chuck E. Cheese arcade tokens, because they can be inflated. The development teams can inflate the supply at will. That is how I would address that. I don't view Bitcoin, I'm not like religiously attached to Bitcoin or gold, and I view that as also a canard. You hear paper bugs talk about gold like it's a religion. You have other people talk, and people do maybe have religious views on it. But my view on it is not because of some bizarre religious belief or anything like that. It's simply looking at what's the best money. If we find something that has a better money than Bitcoin and gold, I'll be all for it.
Right. One of the reasons why many people have promoted altcoins has been this price instability. And although you are optimistic this will calm down in the future, Larry White, I mean, one of the world's top, maybe the top monetary historians or free banking economists, has had that concern that this volatility will not calm down, that it is baked in, and that because of that basically zero or the absolute inflexibility of the Bitcoin supply.
Oh, I think that's wonderful. That means it's uninflatable. So that what he's implicitly recognizing is that it can't be inflated. And I think that's a Keynesian fallacy, that you need to have a money that needs to be, if that's what he's suggesting, that you need to have a group of people who can determine the money supply.
No, he would not say a group of people. He would just say that there's, with gold, if there's more demand, you can actually mine more of it, right? It has some give to the demand to soften the volatility.
The volatility is not coming. I don't believe the volatility is coming right now from necessarily from the limited supply. I think it's coming from the volatility is all to the upside. By the way, if you take the long view, there's not one 5-year period in or 4 or 5 year period in Bitcoin's history where it was lower at the end of the 5 years or 4 years than it was at the beginning. So the volatility is mostly through the upside in Bitcoin. And why is that? It's because there's a lot of speculation. But I tell you, I live most of the time in South America. Bitcoin is a far superior form of money than the pesos and all the other crap currencies that people have here. And frankly, gold is just not on the radar. I live in Argentina most of the year. Gold is just not, it is on the radar screen of some people, but I find everybody here is interested in Bitcoin. They inherently get it. So I'm seeing this being adopted as money in a place where it's a clearly superior form of money than the local toilet paper currency. And I think that is what's giving Bitcoin its volatility, is that it is this adoption. So I think what will smooth out that volatility is if it reaches a level where it's gobbled up enough monetary demand that kind of levels out the volatility. But I think the volatility personally is going to be to the upside.
Yeah, one of the advantages in a place like Argentina is that the borders are so crippled by all sorts of protectionism, and therefore gold, of course, is harder to get in and out of the country, whereas Bitcoin is obviously easily transportable. I mean, there's nothing physical to be carrying around.
Yes, that's true. And I think that's clearly an attribute of Bitcoin that is superior to gold, is that it's so easy to move around. It's so you could send a Bitcoin to China and it'll be there in 10 minutes. It doesn't need to clear customs. It doesn't need to be assayed or to see if it's counterfeit. So that's a clear benefit of Bitcoin over gold. And that's a very important attribute of money. So like I said, gold has a serious competitor. I like them both. I'm not bearish on gold. I love gold. I own gold. I recommend gold. But we have to be realistic here. It has a competitor, and Bitcoin is a competitor, and it's an impressive competitor. So we'll see what happens.
Nick, I'm gonna put you on the spot here. I've done a few webinars where they've been pitched as gold versus Bitcoin, and I've been put on these debates against real, Bitcoin advocates and pretty recognizable people in the crypto sphere. And they've been giving the same argument. I like them both. Yes, they have a lot of the same functions, but Bitcoin this, and everybody should have both. And then at the very end, I'll get them to admit, they'll say, yeah, but Bitcoin's really better. And and where do you fall in that? Do you prefer one of the over the other? Do you think one's going to win out? Do you think that eventually, and this may be 50 years down the road, when Bitcoin is used in everyday commerce, that gold will have faded into obscurity?
I honestly don't know. I am not being evasive. I honestly like both, and I don't know who's going to win. I mean, look, there could be threats to Bitcoin. They could find a way to crack the encryption. There could be threats to gold. You could have nanotechnology that gets all the gold that's dissolved in the oceans and make that. Then gold could be demonetized. You could mine the asteroids. Gold could be demonetized. So there's a lot of things on both sides that could potentially be existential problems for both in the not so distant future. I don't know. I mean, I wouldn't go all in on either. It's going to be a hell of a battle between the two. So I want to have a diversification of both, honestly, because I just don't know who's going to win. There are clear categories where Bitcoin, I think, is superior to gold, and where gold is superior to Bitcoin. And how do you stack those things up to see who will win? I don't know. It's a toss-up.
Yeah, gold obviously has a longer track record. Also, I just wanted to add that not only does gold have a longer track record, but actually I lost my train of thought there, Brian. You were going to say something.
I was going to say Nick is a rarity, a newsletter editor, newsletter writer, public expert on the subject that will admit he doesn't know everything. And that is a rarity. And my respect for you, Nick, was already high, but it's gone up tenfold just by that. The smartest people know what they don't know. And I believe that in respect to Bitcoin, I like a lot of the attributes, obviously, and I think it's definitely going to be a big thing. I think it already is a big thing. But what it ultimately is, I don't know if anybody knows. I don't think anybody really knows. And it's going to be an amazing, interesting thing to watch for sure.
Well, and Nick, the two forces you mentioned of either compromising of both either gold or Bitcoin. One other that you didn't mention, of course, is that, and this is one thing we discussed with Brian on the show, is a massive increase in demand for both of those. Let's say there's heightened fear about fiat currencies or raising awareness, that obviously would raise demand for both of those in a big way. So, of course, there's huge upside as well.
You can think of it like a three-way battle royale between gold, Bitcoin, and fiat. That's what's going on right now for the money. You can't leave fiat out of this analysis. It's the biggest by market cap form of money in the world right now. And let's face it, people who know about gold and know about Bitcoin, we are a tiny, tiny, tiny percentage of the population. So right now, the biggest form of money, I don't like it. I think it's terrible, is fiat, but it's a player. You got to take that into account. But I think you're right. I think where the fiat currencies, I mean, look at what's going on. I mean, we didn't even talk about what's going on with the money printing in the US and the rest of the world, the adoption of modern monetary theory. Actually, that was adopted with, and the adoption of a basic income with these stimulus checks. That's basically a precursor, if not a basic income. All that's being financed by money print. So we didn't even talk about the monetary backdrop, which is horrible. So on the same time, you're having gold and Bitcoin competing against each other. You're having fiat commit suicide. So I don't know how it's going to shake out, but it's going to be fun to watch.
Yeah, it is fascinating. Like, we've been doing this podcast for about 4 years now, and some of what is happening now, I don't know if we even really imagined it at the time. That all this helicopter money, all these checks just being sent out randomly. It's a bizarre time to be alive. So as you say, sometimes it feels like fiat currencies are committing suicide. So
yeah, but I think that's the natural stage. I mean, look, these governments have their back against the wall. What are they going to do? Are they going to stop printing money and let, interest rates go up and then they get bankrupted from the interest costs? No, they're not going to do that. Are they going to stop sending people checks in the mail? Of course not. Who's going to vote against Santa Claus? So it's baked into the cake. I mean, I think it's time, abandon the fiat ship. It's time to abandon the ship.
Right. So, Nick, what a pleasure to have you on the show. His name is Nick Giambruno, and his website is nickgiambruno.com. But we'll have all the links to his Twitter and his KC Research website at goldnewsletter.com/podcast. Obviously, Nick, it's been a pleasure to speak with you. Thanks so much for your time.
Thanks, guys. Great to be with you.
Great to be with you, Nick. Appreciate it.